On your screen, you see a spreadsheet showing a form to calculate federal and state unemployment tax. Your problem yesterday dealt with this, and this is simply a chart. This is not another book of the business. This is a chart to help you figure this out. And you need to calculate both federal and state unemployment tax for businesses' employees on a quarterly basis. And the next step after doing this calculation will be to figure out how we put this information into the books of the business. We're not quite ready for that yet. At this point, I want to make sure you have the calculation process firmly implanted in your mind. So let's take a look at this particular company. We are calculating up here, as you see, calculating the federal unemployment tax based on 0.8%. That's 0.008 in decimal form, and that's very important. And we are calculating the state unemployment tax using 5.7% in decimal form. That is 0.057. So converting the percentages to decimal obviously will be an important step in doing this. And these percentages will vary on a number of factors. And to make things simple, we'll use the percentages given to you in an earlier video. So 0.008 equals 0.8%, not 8%, but 0.8% when you figure federal, and 0.057 equals the amount 5.7% used for the state unemployment tax. So we have 5 employees. You see down here A, B, C, D, and E. E is hired, as it indicates, on April 15th. So for the first quarter, January through March, that employee is not a factor. So let's walk through this quickly. You see employee A earned $2,500. This is the gross pay, not the net pay. So the gross pay for employee A is $2,500, and we pay the federal unemployment tax on the first $7,000. So for the first quarter, when we calculate this, this will be the calculation that we do. If you look up here in the calculation or the formula bar, this is how Excel handles this. And for this employee, we take equals, need that little equal sign, 2,500, which is the amount that he or she earned, times the time sign there, times 0.008. If you do that calculation, or you do it on a calculator, either way, you'll come up with $20 for that employee. The same calculation, again, is shown up here in the formula bar. This time we use 0.057 times the amount earned. Okay? I need to go back here. Didn't mean to do that. So that's for employee A. We do the same thing with employee B. He or she earned $8,000. So we only pay on the first $7,000. So that's why the formula up here shows 7,000 times 0.008. That's the total amount that we need to calculate. So that comes up to 56. Same way with the state unemployment tax. 0.057 you see up in the formula bar times 7,000. So we only pay on the first 7,000. Employee C earned 4,000, so we pay on that full amount. The formula again, 0.008 times 4,000, $32. For the state, again, the same 0.057 times that 4,000. Employee D earned 7,200, and again, we only calculate this on the first 7,000. So 7,000 times the 0.008 equals 56, and again, 7,000 times the 0.057 equals 399. Employee E did not work for us, so obviously there's no calculations there, no earnings. And these totals we will look at later when we get to using this, using the 2 books of the business for this information. So the total for the first quarter for the federal unemployment tax for the whole business adds up to $177.60. For the state, it's higher, and typically it is always higher for the state. that comprises the most of the money that we need to deduct. So this represents money that comes out of our business. And none of this comes out of the employees' salaries. Now, the important part of this particular example is second quarter, April through June. So we work ahead now to the second quarter. This is where it becomes a bit more complicated, and again, you may need to pause and go back and maybe watch the video again if you need to, but first quarter is relatively simple. Second quarter gets a bit more complicated. But remember, we're paying on the first $7,000, not what the person earned during the quarter, but the amount of money that employee earned for the entire year. So let's look at employee A. He or she earned $2,500, same amount as he or she earned in the first quarter. Now we're concerned about the total amount, not the quarterly earnings. So we need to check on how much money that adds up to. It adds up to obviously $5,000. So the key there is that it is still underneath the $7,000 threshold that's important to us. So when we figure the federal unemployment tax for this employee, this comes to $20. If you look again up here in the formula bar, you will see that 0.008 is multiplied by the total amount earned in the second quarter because that employee is not over $7,000 yet. So we base the federal unemployment tax for this quarter based on the amount that he or she earned during this quarter, as long as it's not over $7,000. And the total amount, excuse me, the total amount is not over $7,000. He or she earned a total of $5,000. Same thing happens with state, only the percentage is different. So again, we would use 0.057 up in the formula bar times the total amount earned in that quarter. So that comes to $142.50. Now look at employee B. He or she earned $8,000. Well, in the first quarter, he or she also earned $8,000. So that employee is already over $7,000. So we've paid in the first quarter the entire amount earned, $7,000, times the percentages for federal and state. So no matter how much this employee earns, whether it's $1 or $8,000 or $18,000, none of that matters as far as federal unemployment or state unemployment tax. So there's nothing that we need to pay. That person is already over $7,000. Employee C, first quarter earned $4,000. Second quarter earned a bit more, earned $4,500. So we know that that amount is over $7,000. The total is over $7,000. That's what we need to look at. The total amount earned by employee C is $8,500. We only pay on the first $7,000. First quarter, we already paid based on the $4,000. So we don't pay that $4,000 again. We've already paid that much. So the difference between the total amount that the employee earned, which is $8,500, and $7,000, is going to be $3,000. So we need to get only to $7,000. We've paid based on $4,000 during the first quarter, and we use only the amount that we need to get to $7,000, which is $3,000. So this formula shows 0.008 times 3,000. And again, the state is the same calculation, only a different percentage used. So that's the critical amount. Once an employee gets to $7,000 and this employee is over that, we only use the amount of money needed to get to $7,000. That's why the formula uses $3,000, not the $4,500. As I said, this gets a little complicated, so you may need to review this a couple times. Employee D, again, was over $7,000 during the first quarter, so we don't need to worry about him or her because we've paid the entire federal based on $7,000, and we paid the entire state based on $7,000. So no matter what he or she earns for the rest of the year, we pay nothing at all for that employee. Employee E now is hired April 15th, and that is during the second quarter. And that employee earned during the second quarter $5,300, which is under the 7,000. So we calculate 5,300 times 0.008 for the federal, and we calculate 0.057 times 5,300 for the state. Once again, the totals 96 and 684 are for the second quarter, and we'll consider how that's used in the journal and the ledger a little later on. We're not quite ready for that yet, but it's important to understand how this works from quarter 1 to quarter 2. We could extend this to quarter 3 out here, and finally to quarter 4. But we will find that as we go through the year, the company will have to pay less and less in this because more and more employees will reach that $7,000. So that's the important part. These calculations are based on the first $7,000 earned. So once that is reached, after that point, the employer needs not pay any more of the federal or the state unemployment tax. At this point, I'll ask you to go back to your course page. There are a couple questions to answer.